What's the blueprint to manage and prepare for unknown medical expenses? To buy a term insurance or not to? Health insurance from the employer, or should I also buy my own? If you have any of these questions pondering you, do not wait any longer. Take charge and hear it from our esteemed panel. See what they have to say. And no, do not go anywhere and wait for the special tip at the end of this video.
Let's first talk about protection, and let's first move on to health. And women, as we know, they have their specific health requirements as they age, like men do. And of course, they have their life expectancy is on an average more than men, and that is only going up, which is great news. But how can they be very well prepared? So let's get started, and I would then move on to Mrs. Rashtravar to ask her, can she suggest a blueprint of how they can go about managing their health risk and health expenses? After all, health expenses, one big hospitalization or one big health expense is all you need for you to get set back very badly. So, Mrs. Rashtravar, what would your blueprint be?
Yes. Uh, the first, I would say that being man or woman doesn't matter when you buy insurance specifically. So, as you enter different phases of your life, the need of insurance changes. So, to start with, as I have a grown-up daughter who's also working. So we tell her that first thing, life insurance, I'm sure Dilshad can talk better. I said it's important you take a term. Along with it, you can take a rider if you want, or you buy a separate standard health insurance. Having said that, my experience says that suddenly if we find a lot of accidents happening, a lot of critical illnesses are affecting young people, which we had a wrong notion that it would come later in life. It is not true. Unfortunately, in every organization we see, in our friend circle, we see young people getting affected and afflicted by heart diseases which are incurable. So my suggestion is for protection, have a standard floater scheme as we call it, which is a single sum insured floating over the entire family. Or if you're single, you take a policy which is called an individual health protection. Along with it, you must pad it up with a critical illness cover. Critical illness cover is imperative these days as the numbers are rising and they don't cost much. And the last bit is if you are working, God forbid, if there is something like a very long hospitalization, you will be out of leave, there'll be some kind of expenses that need to be incurred which is not covered in standard health. So do pad it up with the what we call, and the industry calls it, is a per day. There's something called cash that is given out. So there are different names, different companies use different names. So a combination of these three are very critical, and this can go on till some time. Do not reduce your sum insured at any stage when you feel that, oh, I am healthy, it only happens to my neighbors, it doesn't happen to me. I think that's the fallacy involved in many middle class houses. And then later on, when don't go too far, we had COVID cases. Many families suffered a lot. One COVID hospitalization was 3 times more than a normal hospitalization cost. So that, I think, is a big learning for us, a big awakening call for all of us to be appropriately covered. Now, many people ask us, I think I'll leave it for Dilshad. They say, what is an appropriate cover? Now, this appropriate cover I can structure. How much you should take should be something you should weigh on a hospitalization normalization. Excuse me. What does that mean? How many days practically one is in the hospital? So having said this, I would also recommend a small kitty. You can call it escrow account for yourself, a small amount to be kept every month, maybe 500 rupees you can begin with. Build it up, because there are many medical expenses as we grow old which are not covered by any insurance policy. And that money is like a kitty which you can draw upon for long-term care facilities. You can care for ayahs that you require as we grow old. and 75, 78, people require help to change diapers, to do that, and no insurance policy in India is covering this as of today. Maybe tomorrow. I am a big fan of promoting a long-term care policy, but till now I have not succeeded. I don't know, there is no such policy here either, but I have seen abroad, they give you daycare facilities and things like that. But time is not on our side anymore, and we will have to create our own corpus. So two parts, one is insurance and one is some kind of a fund that is required to pay for expenses which are not being paid by any insurance company, like the diaper cost. Minimum cost of diapers today is 6,000 per month. There is an IA cost which is about 15,000 rupees. These costs come in right after you're 78, 80. You require some help. So there are one is when you are 25 and one is when you're 75. So the requirements fundamentally remain same, but additional cost will have to be incurred. So that's from my side.
Awesome. So, Dilshad, I'll be coming to Lakshmi on the emergency fund because this possibly we have got one of the best debt fund professionals right here in the room. But but Dilshad, from your experience of dealing with customers, clients, what would you like to add to what Mrs. Rashtravar just put in terms of actionables, things that can be done?
I think Ms. Anamika has summed up all the information very well. I would just like to add one very important point, being that typically employed people, and both women and men I'm talking about here, they normally say that, look, we are anyway covered by our employer. Why should we take an independent health cover or a life cover? And that is where they're making the biggest mistake. So, we always encourage, the women and men to take independent health covers and term covers, which are independent of employer provided, because you don't know how long you're going to be working with the, you don't know how long what are the exclusions. And typically the employer provided health covers are term based, like a group health cover. The exclusions in group health are much, much more. So when we are evaluating options, we normally suggest, please take independent health covers. And like she rightly said, create a separate health corpus fund. So, and that should kick in typically when you start retirement, because that's when all the aging medical issues normally start. Another thing that we try and encourage people is that unlike term insurance, health insurance premiums increase every year. So take it when you're young, right? And that way you would also get the benefit of no claim bonus. You would not have issues of medical health that you would need to encounter when you're doing your medical tests, etc. So we try and bring in the important facilities like what is the no claim bonus, what are the pre-existing illnesses, what is the waiting period, what are their copay options. So we evaluate health insurance plans based on these parameters. And we always encourage, couples to take independent health cover, even though they are company covered.
Yes, Mr. Rashtravar. Yes.
As Dilshad said, this is a very common, phenomena that is faced, that people who work think that baad mein dekhenge. To all the viewers and all those who are listening to us today, my humble submission is, even if you're employed, even if you don't take a base policy, please take a top-up cover or a critical illness and a hospital cash. It comes very, very handy when you leave a job, or whether you in a transitioning phase. In between, you don't have a job and something happens. During COVID, people, it was sad. People came to us, मैंने renew नहीं किया, एक महीना का grace तो हम लोग देते ही हैं, so अभी हो जाएगा क्या madam, कुछ तो कीजिए. Those things people lost jobs and they didn't have an insurance policy. So this is something I will request all of you, especially my young friends, those who are working, especially those who are working in IT sector. They get very good packages from their employers. And in group policy, lots of things get covered. You may not be able to, what we call, port into an individual policy later in life. With a lot of, this pre-existing, as Dilshad pointed out, will kick in 4 years later, aapko milega. Start small, but start. Start when you are 25. Take a small policy of 1 lakh, 2 lakh, 3 lakh. As you can afford, grow it. And you will not have the pinch of taking it when you're 60 years old. So this is what I wanted to add to Dilshad, and this is very close to my heart. So I couldn't resist myself by butting in at the moment. Okay, thank
Absolutely.
you.
We are all dealing with issues which are close to our hearts. So Lakshmi, I'm just coming to you, but before that, I want to alert Dilshad on the question that I'm going to ask just after you are through. Dilshad, after I finish asking Lakshmi through with the next question, which is going to be about emergency funds, how short-term debt or liquid funds can be used, and you can build up an emergency fund for things which you cannot get in an insurance claim. What I want to ask you next, and you can mull over it, that this health cover that women, so suppose a woman has taken it, a woman typically goes through many life events. You might relocate, you might change your employment status, you might you were working full time, you might want to do temping, you want to set up your own business, then you maybe at some point you have to take care of your family, you've lost your spouse, etc. Now how does what kind of things have you observed, what are the things you can suggest? So maybe you can think about it even as I ask Lakshmi, how does one actually build up an emergency fund? I mean, one way is what I've seen people have currency under their mattress or in their drawers, or they'll park some ridiculous amounts in their savings account. What's a smart way? You coming from a mutual fund person, and we have I think as a country we have evolved a little bit. Are there smarter ways of doing this and having the right amount and not having too much or not have too less?
Absolutely. I think the necessity of or for having an emergency fund is very underemphasized. There is a general tendency कि हमको तो कुछ नहीं हो सकता. And the last 12 months have actually hammer and tong proved it that सबको सब कुछ हो सकता है. So I think that's very, very critical for one to keep in mind. And unfortunately, emergency has a bad habit of cropping up whenever you least expect it. So therefore, this money or this kitty has to be in absolutely, I would say, it should be in your busy money. You can't expect every money of yours to be put to work. So if you want to give, a wing to your investments and say that every money, oh, ye to kitty hai, ye jab hoga tab hoga, let it start growing in the market, it doesn't work that way. What happened if you needed your money in, say, March 2020, and a good chunk of that money was in equities, which was never meant to be? Well, if it is today in March or in Feb 2021, then it's a different thing. But we all have the benefit of hindsight. So I think rule number one, your emergency fund should be in line with your lifestyle, in line with your liabilities, and in line with some exigencies, obviously, which none of us can predict. It could be 2 months, 3 months, 6 months of your current expenses. The rule varies. If there is no hard and fast rule, for you, it might be very different. For me, it might be very, very different. So that's number one, because it's a function of what kind of cash flows you have. Number two, never do the mistake of taking high-end duration risk or credit risk in this emergency fund, or for that matter, trying to, as I said, let it multiply through equities. I think that's the most, the biggest blasphemy that anybody can do is trying to achieve miracles out of an emergency fund, because otherwise the need is completely gone. So I think these are the 2 or 3 things that you need to keep in mind. Can you achieve it through mutual fund investment? The answer is yes. There are alternatives to traditional mode of parking or emergency fund, and obviously, contrary to stashing it under your pillow or underneath your bed, this can be put to work in a very limited manner without really putting significant risk on that, which is the overnight category funds or the liquid funds. I don't see any third alternative, to be very honest, because as I said, this money has to be kept absolutely safe. And it's, as I said, it's trying to guard against a bad habit occurrence. So I think that's where I would say that keep it absolutely simple, keep it straightforward. Don't try to get adventurous with the money, because if you try to do that, then you might have adventure and the calamity all coming in together.
Absolutely. Dilshad, I think Lakshmi has nailed it, but would you want to drive it further by answering some of the points that I mentioned just before Lakshmi started?
Sure. So I think an emergency fund is what we set out for all our financial plan and goal review clients, whether they ask for it or not. It is part of the planning exercise, and it is included in the first time planning. It is included in the annual goal reviews that we discuss with our clients. What we take as a benchmark is typically 4 to 6 months of one's expenses. If they're having loans, we try and add that as well, like committed repayments or liability payments. And if they are a single working woman, we try and extend that emergency fund to 8 to 12 months. Further down, when it comes to individual, say single, women, now some of them might take a break to go on a vacation or like a sabbatical, or they might even want to start their own business. So for those kind of women, we typically plan the period. So we try and find out what is that period for which they will not be needing, I mean, they will not have a regular source of income or something to fall back on. And we try and plan as to what are the sources of inflow or cash flow that, she would receive. Similarly, for women who would like to go the family way and start a family and who would need to take a pregnancy break, such women also would be out of action typically for between 6 to 8 months, 9 months, or even a year. For such women, we try and include a separate emergency fund to take care of their regular, kind of committed repayments or cash flows or just their regular expenses. We also try and ensure that if there is a woman who would want to plan for her aged parents, very often we come across women who say, look, I'd like to do something for my parents, I'd like to put aside some money. So we try and create a separate corpus which would take care of medical exigencies even for the parents. And all this, like Lakshmi rightly put, would go in very, very short tenure debt instruments. It would either be the overnight or the liquid or the ultra short category, depending obviously on the time horizon for which they are, having to have a contingency plan in place.